Good afternoon, ladies and gentlemen. My name is Michalis. I'm one of the market analysts here at HFM. I'm 30 years old, ladies and gentlemen. I've been a trader for more than 10 years now. I'm a licensed financial advisor. I'm licensed by CySEC, a European regulator. You can go on the CySEC website and see that I'm a licensed financial advisor, also licensed within the UK as well. Today, we're looking at how to improve as a beginner. So we're not going to look at, for example, the first steps into the financial trading market, understanding the very first steps you need to take as traders. We're looking at that bracket, ladies and gentlemen, that category of individuals that have been trading. They've been trading maybe a week, maybe they've been trading a month, maybe it's 2-3 months, but they're not quite at the level where they're successful traders. So we're looking at that category, ladies and gentlemen, of yes, I'm now starting to get an understanding of trading, understand how leverage works, I know what a CFD is, I know what tradable assets are, such as stocks and indices and currency pairs. But now I'm at a level that I want to take my basic knowledge and really start to trade like a professional trader, an institutional trader. How can we improve as beginner traders? So we're able to at least at very minimum get from the beginner category into an intermediate level. So this is what we're going to be looking at as part of today's webinar. Now, as part of today's webinar, I don't want it to be like, for example, when we're looking at a strategy, when we're looking at building basic foundations, live analysis, and so on and so forth, where, you know, there's a specific topic, there's a specific presentation, everybody follows it, you can ask questions if you don't understand, and that's it, that's the end. Today, because everybody's a beginner here watching today's webinar, everybody struggles with different factors. I've already done a survey with a lot of people that are watching today's webinar because we had a survey for people that were registering last week for this webinar, and we asked what difficulties they find and how and what things they need to improve on. We also had a lot of one-on-one sessions, and we designed this webinar based on those factors. But like I said, it's not a presentation. I don't want everybody to sit back, write notes, and very simply listen to the presentation. Tell me what issues you are personally finding, and we'll find the solutions here together. Like I said, I've been a trader for 10 years, more than 10 years. I've been a financial advisor for 8 years now, ladies and gentlemen. So yes, today's webinar is educational. We're not here to give financial advice. I'm not going to be here telling you go and buy this and go and sell this and so on and so forth. But by understanding every individual watching today's webinar, everybody, number one, will learn from other people's mistakes, from other people's struggles and weaknesses, and will find the solutions and confirm the solutions live as part of today's webinar. So this is a very important factor that I want everybody to be aware of. A little bit about my background. I don't think it's important necessarily, but people always ask me this question, and I understand to a certain extent it's important to know a little bit about the individual who provides this information. So like I said, my name is Michalis. I'm a market analyst. I've been trading for over 10 years now. I am a licensed financial advisor, was originally a financial advisor in London, but then I've traveled around the world. I've done seminars and webinars and worked with individuals from many different countries. For example, I've done seminars in South Africa, Africa, the Middle East, in over 10 European countries as well. So this is a bit about my background. It's not important for you. It's not going to make you successful or a profitable trader. But I understand, you know, we speak a lot. You watch a lot of my webinars. They're here for educational purposes. It's important to know about the individual who is providing you with this information. Somebody here says, how do I know if that you are a financial advisor? Guys, please ask as many questions as you like. I'm going to go to Google so people can see. Somebody says, how do I know that you previously were a financial advisor? The only thing I can say is if you go on the regulator's website, so for example, here's CySEC's website, there's a list of approved or certified individuals, basically, ladies and gentlemen. Now, if you go here, you can see my name here. There we go. So you'll see on my webinars, and people refer to me as Michalis or Michalis or Mikhail. That's Michael in different languages. So this is the best that you can get. Here is the regulator's website. You can see here that I'm an approved individual on an advanced level as well. So again, it's not necessarily important to today's topic, but I fully understand why people are asking. Now, the first things first, we're going to start to build into this slowly. Of course, as we follow and complete the webinar, things will start to get more and more in depth. Today's webinar is going to be approximately 45 minutes. Now, the first thing, because I spoke, like I said a few minutes ago, last week we spoke to many traders, we listened to many traders, and we saw what their issues were. We analyzed their trading history. We looked at how they're trading. I said to them, you know, you sit in front of the computer every single day. Tell me exactly what you do step by step before you open the trade and even after you open the trade. Now, a lot of the issues are actually around something which is very simple to understand, and that is your trader profile. Every professional trader will know his profile. Every institution, for example, institutional traders, they have different departments, and each different department will know their profile. So what do I mean by profile? Understand what kind of trader you are. So you need to have a trading plan. You need to know when you're going to trade, what you're going to trade, how you're going to trade it. You need to understand what your success, if you don't know what your success rate is, don't forget, here we're looking at individuals that are trading maybe 1 week, 1 month. So everybody has opened some trades. If you don't know your success rate, if you don't know what you are trading, you will not be able to improve as an individual. So this is something very important. Let's go through each point step by step. The first thing, a quote. Okay, very, very important quote. Most temporary traders are unsuccessful. Most traders with 10+ years experience are successful. So the first things first, and this is all in regards to trader profile. I speak to a lot of individuals who said, you know, I want to be trading for maybe 2 to 3 months, and I want to earn X amount. First things first, most temporary traders, most individuals that, you know, come in, they want to very quickly make a trade, make an investment, have it open for 2-3 months and then exit. It's almost guaranteed that individual's going to be unsuccessful. It's a statistical fact that individuals that enter the market, they want to very quickly become millionaires and very quickly exit the market, so stop very quickly. So they deposit $50. In 3 months, they want to be significantly much better off and then never have to trade again. Those individuals, 99.9% of the time, will be unsuccessful for 2 reasons. Number one, because you have to understand your profile. You are a beginner, okay? So what are we looking to do? Your target from the very first step is wrong and it's putting you at a disadvantage. What disadvantage? Number one, you're going to be unhappy. You're going to be very emotional. Your emotions is going to make your trading worse because you put yourself a deadline and you put yourself a target, which is extremely difficult for a beginner. And this is one of the reasons, again, looking at the quote, it's a fact, a statistical fact, most temporary traders are unsuccessful. Traders with 10 years experience and above are successful. Not all of them, of course, but a very much larger percent. So you're entering the market. Don't put yourself a stupid deadline. Let's trade responsibly. Let's give ourselves a responsible target. And for example, I did a video the other day, which is currently on TikTok. And I said to individuals, forget about the money just for a moment. Forget about the profit. Set yourself a target. Set yourself a target of being profitable on a demo account, of picking an asset that you want to be trading. Okay, so you picked an asset, set yourself a target of some education, getting a basic understanding, and then as you achieve that, you've traded on a demo account, you fully understand how trading works now, you've chosen your asset, you've started trading, you've got a basic understanding. Look at your success rate. Your success rate potentially, most likely, is going to be low, maybe 50%, maybe you're just about breaking even because you're a beginner. The second target is not to become a millionaire, or the second target is not to quadruple your money in a very short period of time, because in order to do that, you'll intake a lot of risk and become an irresponsible trader, and potentially may incur a loss, and that's something we don't want. Give yourself a target of saying to yourself, you know what, my success rate is 47%. Let's increase the success rate so at least it's on the positive side, that is above the neutral. Let's go from 47% to 57%. So then you go to 57%. Set yourself another target. Now I am 57%. Let's at least bring the reward to risk ratio to a certain level where I'm at a break even. So then I've got a positive success rate, and also I'm at a break even on my trades as well. And then you take it step by step. After 3 months, after 6 months, after 9 months, you can start to increase your target and the way you want to perform as a trader based on your profile, because you fully understand your profile. You're a beginner now, so you need to take the right steps which beginners need to take. As you become more experienced, then you can amend your target and your objectives based on your profile, because your profile is changing. So it's important for traders to understand what kind of traders they are, what is their profile. Most traders do not understand their profile other than the fact that they are beginners. So if I said to individuals, what's your trading profile? They say to me, I'm a beginner. It doesn't really tell me much. And it's not going to tell you much, and the fact that you're a beginner isn't going to make you a profitable trader. Have a clear idea of what your profile is in order to be able to create a plan, a journal, and know your trading requirements. Now, the first thing I want people to take into consideration, people always say to me, tell me something which can help me improve. And on every single slide, I will. The first thing people need to understand is if you're going to come into the market without knowing what you're going to trade, okay, because you're not making an investment, okay, you're trading, you're not building a portfolio, you're trading, okay. Of course, trading is an investment, but what I mean is it's not buying a stock. You are not building a portfolio. You're not building a mutual fund or a managed fund. You are trading. This means you're actively buying and selling, buying and selling, buying and selling. Now, if you're coming into the trading market without knowing what you're going to trade, you're going to find it very difficult. The first thing I'll say to you is a lot of people make the mistake of trading different assets. Now, if you're building a portfolio, it's understandable you want to mitigate the risk and spread the risk. If you're trading though, if you're trading different assets, there's a massive disadvantage. Number one, because all of these assets are different. They have different traditional price movements. They have different domino effects. They have a different line of influence. They have different fees, different trading characteristics, different price characteristics. Every asset is different. So if on the very first day, you have to learn 3 assets or 10 assets or 15 assets, you're going to struggle. The next thing I'll say is a lot of beginners, they find difficulty because they keep changing the asset they're trading. So this week they traded the Euro USD, next week they trade the NASDAQ, the week after that they traded the DAX, and so on and so forth. The issue with this is every time you change, you're a beginner again. Okay, so even if you're an experienced trader with 1 year's experience trading the Euro USD, if you switch to gold, you suddenly become a beginner again. It's a completely different asset. Everything about it is completely different. So think about this. Stick to one asset. There's benefits to sticking to one asset. Now, if you want to trade a million different assets, that's completely up to you. There's benefits and advantages to sticking to one asset though. That doesn't mean you have to earn less, you have to trade less or whatever. It very simply means your knowledge and your experience and your expertise and your success rate is likely to vastly improve at a much faster pace if you're only concentrating on that asset. For example, if I myself go and play football every single day for a month, of course, I will improve as a footballer and I need to improve a lot. Whereas if one day over the next month, one day I play football, the next day I play tennis, the week after that I start playing rugby, after that I start playing basketball, I will never improve. I will never, ever improve. And the same thing applies to trading. So think to yourself what asset you're going to trade. And this is why I've got this here. What asset are you going to trade? And this is a traditional pathway of beginners. You know, they start trading, okay? The first thing you'll notice when they start trading, 35%, that is a very low success rate. That's absolutely fine. That's not an issue. People may join trading for the very first time and they very quickly become stressed that they're not successful and they're not profiting. Know your profile. You're a beginner. Don't get stressed about this. It takes time. We're going to look at this as part of today's webinar. You notice success rate, very low. Reward to risk ratio. What does the reward to risk ratio mean? It means per trade, how much am I looking to earn? For example, the take profit, and how much am I willing to risk? For example, the stop loss. You'll notice most beginners have a negative reward to risk ratio. So he's trying to earn per trade $5 and he's risking $20. So he's very quickly closing his profits because he's emotionally unable to keep them open to try and earn more. And he lets his losing trades run on because he wants to give it an opportunity to move back into his favor. Most of the time, it will not take place. So this is very normal for a beginner trader. Normally in the first month again, traders are very excited. They tend to open a lot of trades. Second month, his reward to risk ratio improves. He normally, because he's suddenly become taken a big hit in confidence, his number of trades will normally decline significantly. His reward to risk ratio is the exact same. Sorry, his success rate is the exact same. The third month, you'll notice he's only trading one asset, only one asset. Third month, success rate improves. Amazing, okay? He's still not a profitable trader. Still not he's not wiped out his account. He's not put $1,000 in the account. He's now got nothing. He may have invested 1,000. He may now have 900 or 800, something responsible. And another thing for you to take into consideration, if you're new, and if you're new, you have a low risk appetite, open the minimum trade. Open the minimum trade. Don't risk your account. Don't risk wiping out your account and losing a significant amount of money just for you to learn and become experienced and start to become profitable. Open the bare minimum trade. It may move a couple of cents. It may move a couple of dollars. It depends on you and your account and your leverage that you're using. So keep that in mind as well. As your success rate becomes much better, your reward to risk ratio becomes better, you can increase your trade size. So third month, success rate improves, reward to risk ratio is the same, open some more trades. Fourth month, success rate is much better compared to the first month. Reward to risk ratio is also much better, so open a lot more trades. Fifth month, he's changed assets. He's now gone from a success rate from 42% to 35%. Same thing the next month, same thing the next month as well, slightly improved on the third month. He's returned back to the Euro USD. So this is a very good example, okay? You're keeping a trade journal. You know what you're trading. Know your success rate. Every single week, look at your success rate. Say to yourself, this week, how many trades have I opened? Have I opened 20 trades this week? On average, for example, if, for example, 5 of those I closed in a profit and 15 I closed in a loss, I've got none open, then I've got a 25% success rate. If 10 were in a profit, I've got a 50% success rate. 75, sorry, if 15 were profitable, then I've got a 75% success rate. So every single week, relook at your success rate. Every single week, look at your reward to risk ratio. So say to yourself, per trade, how much am I willing to risk? How much am I putting my stop loss at? And how much am I am I putting my take profit at? So for example, somebody who was a beginner trader and was trying to improve, and we spoke to him last week, he said to me, I don't understand. I've got an amazing success rate. My success rate is 70%. I've been trading for a few months now, but I'm not really earning any money. Why is that the scenario? And we look at his trades, and there's a couple of trades, not on every single trade, but there's a couple of trades where I could see, his take profit is at $10, for example. He's not putting a stop loss, and he's closing the stop loss at, for example, 75 US dollars. Okay, he's closing the trade. He's not putting a stop loss, but he's closing the trade at 75 US dollars. That is more than a 7-to-1 negative reward to risk ratio, or 1-to-7, sorry, negative reward to risk ratio. How are you going to be profitable? So, very important thing to think about: opening the very minimum trade size, trading one asset. Number 3, every single week, look at your success rate of that week. Look at your reward to risk ratio of that week, because number 1, your success rate, you're going to be able to see how you are improving, if you are improving, and number 2, you're going to be able to see if there's issues with the way you're trading and your trading plan based on your success or based on your reward to risk ratio. So just by doing this every single week, you'll be able to build your profile as a trader, to know your profile as a trader, and also to be able to know what it is you need to do, how to trade, what methodology, what approach to take, what tools is needed, and how you need to change your way of trading in order to improve and go from a beginner to an intermediate, to go from an unsuccessful trader to attempt to become a successful trader, or at least go from an unsuccessful trader to a trader that's now at break even. Because if you are at a break even and have 6 months experience or 3 months experience, it's a much easier path to go from there to a successful trader with 1 year, 2 year, 3 years experience, rather than being an individual trading 1 month and he's got a negative success rate and he's not breaking even. So it's step by step. So I've got a couple of questions. I'm going to quickly answer these questions as well. I've got an individual here who says, how can I easily interpret the chart in order to determine when to start trading? An amazing question. Some of these slides will look at a strategy, okay? If you need more strategies at the end of the webinar, we'll go on to the MT5 together and we will look at different strategies which is appropriate for you. I've got another individual. I need assistance with calculating my reward to risk ratio. My reward ratio and risk management. So the reward to risk ratio, it's very simple. Where you put in your stop loss, okay, and where you put in your take profit. Now, instead of individuals going on to the MT5, MT5 is amazing for analysis. Guys, we've got an app, we've got a mobile app. Go to the mobile app, put your place, select whether you want to buy or whether you want to sell, and put your stop loss and take profit. It will show you in actual money terms what that means, okay? So for example, I may be buying Apple stocks, for example, it's at 150 US dollars. I'm placing my take profit at 152, and I'm placing my stop loss at 142 1, for example. So I'm looking to earn 2, I'm looking to risk 1. So that's a reward to risk ratio of 2 to 1, okay? A reward to risk ratio of 2 to 1. So this is how you work out your reward to risk ratio, okay? Use your mobile app because it will show you what your trade means in actual money terms. It will show you if you put your stop loss here, that's $5. If you put your take profit here, that's 50 US dollars. So that answers that question as well. We're going to look at risk management throughout the webinar. So what are your strengths and what are your weaknesses? So as you start to do this and you look at your profile, you look at your trading history every single week, and re-look at every single trade, okay? You'll be able to start to see where your strengths are and where your weaknesses are. And these are real examples from when we did the survey from individuals that actually registered, not this week, but actually last week. I've got some questions. I will keep on answering these questions as well. Some of them we'll have to look at the end, like the strategy. We'll go on to the MT5 and we'll look at that together. So strengths. And weaknesses. Let's start off with the weaknesses, I think. Beginners, of course, will have a low success rate. Now, the first thing that, what's, the solution for this? I want a solution for everything, okay? It doesn't mean because you have a low success rate, and you will have a low success rate, even if you come in, I've got some individuals that definitely are going to be very confident and cocky, and they're going to say to me, I've been trading for 2 weeks, and I'm in a profit. My success rate is 70%. It is now. I guarantee you in 2-3 months, you're going to come back to me and say, actually, on quite a few weeks, it actually turned negative. So my overall so far, I'm actually a negative reward, a negative success rate. So how can you find a solution for that? How can you find a solution for a low success rate? There is a solution. I'm not going to sit here and say to everybody, look, you have to be an experienced trader for your success rate to increase, so you need to suffer for a year. That is a wrong take. That's not what I'm trying to say. Yes, you've got a low success rate. Yes, it's going to slowly increase, ideally, as you become more experienced and confident and you understand. But that doesn't mean you need to be an unsuccessful trader in the meantime. Doesn't mean because you have a low success rate, you have to be unprofitable or making a loss. So you always need to look at your success rate, okay, compared to your reward to risk ratio. So you need to look at your success rate compared to your reward to risk ratio. And I'll give you an example. Let's say, for example, somebody has a success rate which is very low. For example, let's say it's 30%. So what does 30% mean? That means if he opens 20 trades per week, 6 are in a profit, 14 are in a loss. Now, if per trade that he closes in a loss, he risks $10 US, that means his loss at the end of the week, his expenses, should we say, is 140. Okay. If though per trade that is profitable, he's closing it at $30 US, his revenue, should we say, his profitable trades is 160 US dollars. So he's got a very low success rate. His success rate is 30%, it's very low, but he's amended his reward to risk ratio to ensure, yes, it's low, yes, it's going to improve slowly as he gains experience, and he's going to work towards that. Absolutely fine, it's not an issue. But in the meantime, he's going to ensure that he's still attempting to be profitable. He's given himself, like I'm saying up here, the best opportunity. Give yourself the best opportunity to succeed. Doesn't mean there isn't risk. You're still going to have losing trades. You've still got a low success rate. You may have a bad week. You may have a bad couple of weeks, but you're giving yourself the best opportunity to ensure you are still successful. So that is something very important. Look at the mathematics behind your trading. So yes, your success rate is low. that means I need a specific reward to risk ratio. That means to be successful, per trade that I do close in a profit, I need to close at this much. Per trade that I do close in a loss, it needs to be no more than this. So when we are right, we're making sure we maximize profit. And when we are wrong, we're ensuring that it's controlled. Whereas beginner traders, they try to control profit and close it very quickly to make that profit concrete. And they allow losing trades to run freely with hope that it will start to move into their favor so they can close it at a break even or at a profit or at a smaller loss. And this is why traders, while trying to increase their success rate, struggle financially. That's not the scenario. So that's number one, something for us to take into consideration, a very big factor. Number two, price action during news. So the price movement when news is going to be released. A lot of people said this was an issue for them. It's understandable. There's a couple of things, 3 things that is going to help individuals on this factor. Number one, normally when news is moving, about to be released, hasn't been released yet, the price starts to move sideways. Take into consideration pending orders. So if a certain price movement happens, a trade will automatically open. And also take into consideration closing that very quickly because it's very volatile, and 95% of the time during news, you get volatility and it will move in the opposite direction thereafter that. Doesn't mean you trade against momentum and against the trend because there's risks to trading against the trend, but you can very simply place a pending order here so that if this happens, your trade will open automatically here, or placing a pending order here. So if this happens, your trade will automatically open here. This is number one. Number two, something else which is going to massively help you is whenever there is an impulse wave during news. So for example, the price may be doing something like this. The impulse wave is down like this. 90% of the time, it will do this. Or if it doesn't do that, it will start to do this. 95% of the time. So that fact will also help you. The last thing, people I don't think will expect this. If you're struggling trading during news, don't trade during news. I don't know why people feel the need to trade during news. People say to me, there's a lot of volatility. I have opportunity there to earn a lot of money very quickly. Look at your success rate. Look at your reward to risk ratio. Look at your financial performance every single week. If that's improving, you are experiencing the best outcome possible. If every single week you improve, that is the best outcome. After you have a 70% success rate and you have a positive reward to risk ratio, and every single week you are earning a profit, whatever that profit may be, whether it's low or high, then you can start taking into consideration trading news. Then you can start taking into consideration opening large trade sizes, and then you can start to give more attention to how much money can I earn, how much opportunity is there. The other thing, a lot of the time individuals trade assets that are very expensive. So the first thing I will say is the Euro USD is the cheapest asset. It will always be the cheapest asset, and it is by far the cheapest asset. So from the very first day, if you're trading the Euro USD, you are at an advantage. This is the full thing that I'm going to say. Letting losing trades run. A lot of people say, I don't put a stop loss. If it moves against me, I let it run. If it moves into my favor, I close it. I put my take profits. I know my target for profits. Otherwise, I let it run. And at some point, it's going to move back into my favor. Nobody said that it's going to move back into your favor. Nobody said that. And it will wipe out your account. So why do you want to wipe your account out with one stupid trade. For example, here, let's go to one. Let's actually go to weekly chart. Okay, somebody here may say the price is declining. It's been declining 2 weeks. We're going to see a trend. It's going to keep on declining. So I'm speculating a decline. So at this green line at the very bottom, I speculated a decline. It was the wrong decision. That's not an issue to make a wrong call. But if he didn't close the trade, he would have definitely wiped out his account. 100%. And this, ladies and gentlemen, you can very clearly see here. Since then, by the way, his swap overnight fee would have been massive. And we're currently trading 31.5% above. So he's got no chance of being profitable. So very simply, have a reward to risk ratio, which is your take profit and your stop loss. Stick to it. Now, some people say, I don't want people to be able to see my stop loss and take profit. Okay, that's absolutely fine. It's not an issue. Don't put a take profit and stop loss. But in your head, mentally, before even opening the trade, you should know to yourself, you know, the price is here. This is where I'm opening my trade. Before I even open it, I know that I'm going to exit here and I'm going to exit here. So regardless of whether it's going to move in my favor or not, I know where I'm exiting. Okay, and I know how much this is, and I know how much this is, and I know that if it hits that, great, that's going to help me a lot. But if it hits this, it's not an issue. So that's massively going to help as well. A lot of issues came around from lack of discipline. To be honest, that's because nobody has a trading plan when they're beginners. So go back to, you know, what we were looking at here. This is a trading plan. This is a part of a trading plan, should we say, because I know what asset I'm going to trade, and we're going to look at trading plan in a moment. You know your success rate, you know what needs improving, you know what reward to risk ratio is required for you to be successful, even though your success rate may not be very high, and so on and so forth. Overnight fees, guys, try and avoid them. Makes trading very difficult. If you're going to keep your trades open overnight, keep in mind normally on a Wednesday, the overnight fees triple. So that's definitely a no-go. And also keep in mind, guys, we offer swap-free trading to everybody. If you go to Google, type in HFM, HF Markets, swap-free trading, will bring it up to you straight away. You can speak to your account manager, you can speak to the support team, which is always available to everybody. You can trade without swap fees if you want to trade overnight. Strengths. Traders normally have when they're beginner traders, have longer term strength, and they're able, when they're beginners, to be able to determine the longer term trend at a very high level, but they struggle with short term volatility. And we're going to look at a solution for that in a minute. Short term volatility. So they're normally good at very long term trades, but short term, they're not so good at that. So we need to look at a solution for that. Closing profitable trades. People close profitable trades very easily, very quickly. They're normally very good at stock-based assets. So if you are an individual who wants to make trading as simple as possible, there's two ways you can go about it. Number one, you can trade the Euro USD, which is the cheapest, brings you a big advantage. Number two, you could trade something which is stock based. So trade the Apple stock, trade Tesla stocks, trade Alphabet stock, Microsoft stocks, trade the Dow Jones, which has 30 stocks, trade the NASDAQ, which has 100 stocks. Stock-based assets are easier for you to understand, easier to trade, because it's something that we know every single day, easily accessible in terms of news, very clearly able to see the line of influence for that asset as well. Strengths, definitely everybody that's a beginner, somebody that's a beginner, they can't do advanced analysis yet. Everybody though can have a trade journal, and a trade journal is massively helpful, massively helpful. So increase your profitability. Your profitability is based on two factors: your success rate and the reward to risk ratio. Remove the element of strategy for the moment. Okay, if you know your success rate and if you know your reward to risk ratio and you know how many trades you're going to be opening every single week, you know what is required in order for you to be successful. It's very simple. I don't want to make it complex. I've got some questions. I will answer those in a moment. So I'll give you an example. I look at how many trades I open every single week. Every single week I open, let's say 1 week I open 9 trades, the next I open 11, the one after that I open 10. Most week I open 10 trades. On average, I open 10 trades. So I know I'm going to try and open 10 trades every single week. My success rate, let's say, is 50%. My stop loss every single time is at $10 and my take profit is at $5. So I know that at $50, I'm going to be losing from losing trades. And I also know that $25, I'm winning from winning trades every single week. All of them are closed. Let's say I'm not keeping them open overnight, so no fees and so on and so forth. So I know that doesn't work for me. That's not working. So that's, a minus of $25 every single week. I don't want to do that. So I know I need to amend that. So how do I amend that? Let's start off with these 5 trades. Look at the previous week. Every single time which I was right, go back and see where you opened those trades and where you closed them every single time. So let's say, for example, trade number 1, let's say I opened here. It started to move in my favor. I closed here. After that, the trade did, let's say, something like this. Okay, that's trade 1. If all 5 trades are like that, I know for a fact that if I kept those trades open for longer and I kept them open until here, I would still have been hitting my take profits. It wouldn't lower my success rate. So I can increase that. So instead of trying to earn 5, I'm trying to earn 10 per trade. So straight away, I'm at a break even. Straight away, ladies and gentlemen, I'm at a break even. And then I go to all the trades that I'm losing. Okay. So for example, let's say, again, same scenario like this. I open a buy here. The trade, ladies and gentlemen, does this and then this and this. Let's say I exited the market here. Okay. Here, ladies and gentlemen, if I kept the trade open for longer, so for example, if I had it here, if I had my stop loss here, no matter how low and how much time I gave it, it wouldn't have been a profitable trade. So if I increased my stop loss, it wouldn't increase my success rate. So I know I can't increase my success rate based on the reward to risk ratio at the moment, based on my knowledge and my profile. But what I can do is I can increase it slightly higher. Okay, so now let's say I'm looking to earn $10 per trade and I'm risking $9 per trade. So I'm more or less at a break even, maybe a slight profit every single week. So increase your profitability, or at least your chances of being a profitable trader. Guys, we're going to look at strategies in a moment. Let's quickly answer some of these questions. How to use the MT5 using HFM. Guys, if you go, I'm going to show you the easiest way, I think. If you type in HFM, MT5, here, guys, very easy to follow. Okay, you can download MT5 here. You can create an account. You got here, open a demo account. Also, guys, you've got the support team here. Okay, you have the support team. If you log in and speak to the support team, they will answer straight away. I'm talking about in a couple of seconds, they will answer your question. And you're speaking to a real person. It's not a robot, it's a real person. So how to use the MT5 is a technical reason. It's a technical question. If it's in terms of how to use the MT5, you know, once I've downloaded it and I've logged in, how do I use the MT5? How do I use this? We've got webinars which are for this. So the best thing I would say is if you go to YouTube, or even if you don't want to look at our videos, even if you type in how to use the MT5, there's so many, so many tutorials that will show you how to use the MT5. So I don't want to spend the next half an hour speaking about the MT5. Somebody says, please can you elaborate on overnight trading, please? So basically, overnight trading is if you open a trade and I don't close it by 12 o'clock, I will be charged an overnight fee. Now, this isn't something which is HFM. It's something that is across the market. Every single platform charges an overnight fee. Every single platform. So it's nothing to do with HFM. It's every single platform. It's across the whole financial trading market. So what I simply say is use a strategy and an approach which doesn't require you to do so. So that's the only thing I was mentioning in regards to overnight fees. Somebody says, what is the reward to risk rate, the reward ratio mobile app called? It's not a mobile app, the reward to risk ratio. The reward to risk ratio is just something that you work out based on your trading. So you're very simply just saying to yourself, per trade, how much am I risking? Per trade, how much am I trying to earn? Okay, it's nothing, it's not an app or a calculator. However, if you go to our app, if you go and download the HFM app, and you go to open a trade, there's an option there that says input a take profit, input a stop loss. When you input a take profit and stop loss, it will show you what it means in capital terms, in money terms, in dollars, for example. And you can easily work out your reward to risk ratio based on that. So hopefully that answers those questions. Now, some people are going to say to me, how do I know my success rate? You know, I understand I need to look at my success rate. I need to look at my reward to risk ratio to increase my profitability or chances of increasing my profitability. But every single week, my success rate is different. Now, as a beginner, every single week, your success rate may change. To be honest, as you become more experienced, it will start to flatten out and become more traditional. So what can you do as a beginner? If it's increasing in value, you can, for example, use an average of a specific period, which is up to you. So for example, it could be 3 weeks. Let's say I'm trading a month. I ignore the first week. I'll look at my success rate for the past 3 weeks. So for example, week 1, I had a 50%, week 2, I had a 55%, week 3, I had a 60%. So I add them all up, I divide them by 3, and it will give me the average. So my average is 55%. So you take your average and you minus it by 10%, just to be safe, just in case your success rate is lower. So that will give me a success rate of 49.5, because 10% of 55 is 5.5. So 55, the time if you minus 5.5 is 49.5. So you're looking at a lower success rate just to be safe. If it's at 55, it's not a problem. You're just earning more money. But what if your success rate is decreasing, which hopefully it isn't, but it could decrease? Then you look at the lowest success rate, and again you minus by 10%. So for example, if it's 60, then the week after is at 50, then the week after is at 40. You're going to take 40 minus 10%, so that's 4, which is basically 40, which is basically, sorry, 36%. So you're going to be working off a success rate of 36% because your success rate is declining. Next thing you need to look at is, are you able to change your reward to risk ratio, which is what I mentioned previously, okay? The last thing I would say is try and stick to a predictable asset. Certain assets are easier to predict than other assets. So somebody is looking at trading, for example, which is very volatile, very up and down. The spread keeps changing. What's influencing the asset keeps changing. It rarely has a trend. You're going to struggle to predict it. Something which is more predictable, though, you will give yourself an advantage in terms of your analysis. So look at something which is more predictable. Now I want to look at give you an example of what I mean by, can you change your reward to risk ratio? So for example, let's say somebody bought here. The trade did move in his favor a little bit. He made the mistake of keeping the trade open overnight. Why incur fee? I mean, there's no need to do so. So this is his trade. The market moves against him, he's at a loss. If he put a stop loss here, okay, it's very close to where the trend actually started to move back into his favor. And let's say his second, so if he kept hold of the stop loss at the trade for longer and he put a stop loss slightly lower to here, he would have at least had the goal of bringing that to a break even. So that's trade number one. Let's say trade number two. If it's the same scenario, then he needs to take that into consideration. Let's say somebody was buying here. What should we say actually? Let's say somebody bought, for example, here. He bought here. The market moved in his favor. He didn't close it. He's an idiot. But anyway, I'm just joking. And the market started to move against him, like here. And his stop loss is here. Again, it's the same scenario. If he had his stop loss down here, the market would have moved back into his favor. If he was buying here and his stop loss is here, again, he could have increased his stop loss, put it further away, and that would have been a profitable trade for him. So you can see on that scenario, you could put your stop loss further away and increase your success rate. Or, for example, a different scenario. Let's say here I'm selling and I'm speculating a decline. And I close a trade here. I could have kept the trade open for longer and been more profitable. On the second trade, again, let's say I sold here, exited the trade here. Again, I could have kept the trade open for longer and been more profitable. Let's say I bought here, closed here, same scenario. I could have kept it open and been more profitable. So every single week, you re-look at your trade, which is part of your journal, and see if you could have changed the stop loss to increase your success rate. If not, could you have reduced the stop loss so you make a smaller loss without having a negative effect on your success rate? And at the same time, for the trades that are profitable, could you have increased your take profit? If not, if you decreased your take profit, would have it increase your success rate? Because, for example, you may say to yourself, for example, let's say you bought here and you put your take profit here. It's a losing trade for you. But if you had your take profit here, that would have been a profitable trade. So if, for example, putting your take profit closer, that increases your success rate from 40% to 60%, maybe that's something which is, clever for you to do. If it doesn't change your success rate, of course, you're not going to do that. So let's continue. So this is an example of a trading plan. And the next thing we're going to look to have a solution for is people that struggle with short-term volatility and an actual strategy to help them enter and help them exit. So this is a very, very basic example of a trading plan. Number one, I'm going to trade one asset. I'm not trading two, I'm not trading three, I'm not trading 30. Most beginning traders are trading so many assets that it's so hard to learn, it's so hard to improve, and it's so hard to manage. why make that mistake? The next thing, what session am I going to trade? I'm not going to trade different sessions every single day because that asset acts differently in each session. Of course, you're going to analyze all prices, all price movement, but I'll try and only trade in a specific session. So for example, I may say I'm only going to trade between 10 o'clock up to 12:30 only. So European session, Euro USD only. Never keep trades open on a Wednesday and over the weekend. Keep in mind there's something known as weekend risk and overnight risk. So number one, never on a Wednesday, because I'm never accepting an overnight fee, which is more expensive. Always on a Wednesday for the Euro USD, it's more expensive on a Wednesday, so I'm never accepting that. Number two, I'm never going to keep it open over the weekend. But sometimes I will allow it to stay open overnight if I'm certain that it will increase to my take profit. So for example, rarely keep the trade open overnight, only on 10% a week, or let's say 10% a month. I know how many trades I'm opening per week. I'm opening 10 trades per week. My reward to risk ratio is 1.5 to 1. So basically I'm looking to earn 15 and I'll risk 10 per trade. My success rate is 75%. Of course, I've got more experience. That's not my success rate, but let's say somebody with more experience. Minus 10%, so that's 65. So that's my success rate. So basically 6 trades, I close in a profit, 4 I close in a loss. For the loss, it's 40 every single week because I'm risking 10, never more than that. And for the 6, it's 15. So that's, ladies and gentlemen, what is that? That's 16. And 5, that's 90. Okay, so per week, I'm looking to earn $50 mathematically. 10% exception on losing trades. What do I mean by that? If you want to give a trade more time because you think this has volatility, but I need to give it more time because it will move in my favor very soon. There's no point in moving in my favor next week, but very soon, you can increase your reward to risk ratio, but you only will allow yourself that on 10%. This is just an example, by the way. You can change this. You can say, I'm never going to allow myself to increase my reward to risk ratio to a negative side. So for example, here, I'm saying 10% exception, I will allow a negative reward to risk ratio. So I'm looking to risk $25 to earn $15, which is why it's rarely allowed. For example, my approach, I know my approach, I'm only looking to trade the trend and short term. So short-term volatility, a lot of people struggle with short-term volatility. What can we do to help ourselves with short-term volatility? Number one, you can look at very short-term trades and focus on short-term trades. So for example, this is the NASDAQ on the 4-minute time frame. By the way, the NASDAQ is the most traded asset on our platform. This was taken yesterday, actually the day before yesterday. I think this was taken from Monday. And I'm looking at a strategy, but what's the solution? Number one, the solution is ultra short term. Number two, I'm putting my stop loss and take profit further away and allowing more volatility, because the issue that I have is volatility. So I allow more volatility. So, some people, well, let's look at this, the strategy, and then we'll look at where normally people will put stop loss and take profit, and also a better way to put it. So I've got here a 75 bar simple moving average, so 75 SMA. I've got an 18 period simple moving average as well. And I've also got 8 period, which is the orange EMA as well. So these are the 3 indicators on the chart which I have added. Okay, so you can see them here. We've got the green, we've got the red, and we've got the orange and gold as well. So if the price is above, like you can see here, I'm only looking at where there's opportunity to speculate and buy. When the price is below, I only look at opportunity where to speculate a sell. So this helps from the very first scenario. Where do I enter buys though? Because of course here we can see we're looking at an upward trend, we can see we're above the green, so I'm only looking at opportunities to buy. Where do I buy though? Now when the yellow crosses above the red, that price is where you buy. So here we have the first crossover. Here we have the next crossover. So here, the next crossover is here. This is the next buy, and also cross below here and then cross straight back up here as well. So we have 4 trades, okay? This is in a profit, this is in a profit, this is in a profit, and this is in a profit as well. All of these are in a profit, okay? So when you got the red line here, for example, when it crosses over like this, it's at that point you buy. It crosses above the red. It indicates there's enough momentum for a trend to potentially form. So every single time you have that, you've got to cross over here, kind of a crossover here as well, and a crossover here. Every time there's a crossover, that's where you buy. But you only look at upward crossovers, not downward crossovers. And you also don't look at this upward crossover because it's below here, so it's conflicting. So you want to be above the green and look at upward crossovers, or below the green and look at downward crossovers. Of course, some trades will still be closed in a loss. It's not an issue though. As long as your success rate and your reward to risk ratio is right, then happy days. The last thing I also want to say is increase your success rate. Most people that, for example, speculate a buy here, a lot of the time they'll put their stop loss here or their stop loss here. Put your stop loss further away. So for example, put it down to here, ladies and gentlemen. And what you would do is, if you do that, increase your aim that you're looking to as well, because you don't want a negative reward to risk ratio. You don't want to risk, for example, 20 and you're only looking to earn 5. So increase your reward to risk ratio, trying to earn more, and look to earn, for example, 20 as well, or look to earn 25, for example. So you're increasing the bracket, which will allow volatility to support and as a solution to short-term volatility that you're struggling with. Let's continue. Monitor and stay humble. Let's get our pen, our laser back out. One of the biggest issues for new traders is staying humble and disciplined. We're recapping here, ladies and gentlemen. So don't come in, look to be short-term, trade for a month and become a millionaire. Stay humble, stay disciplined to your trading plan, to your success rate, to your profile, and to your reward to risk ratio. Most beginner traders struggle due to not closing, losing trades. So very important to have that reward to risk ratio. Always stick by it. Traders can be short-term, but that does not mean trading is a quick lottery. Remember what I said. If you're gonna start and then just give up straight away, or try and profit straight away and then exit, never have to work or trade again, you're not going to be successful. Stick to your trading plan, improve your trading plan. Do not set unresponsible targets, as emotions will get the best of you. Ignore a trade closed in a loss. What do I mean by that? A trade closed in a loss is not an issue, as long as that loss isn't damaging your account, and as long as your reward to risk ratio is still allowing you to be profitable. Do not gaze at profitable trades. As soon as the market moves again in your favor, don't sit there looking at your profit, because you definitely will close it very quickly. Allow it time. You know what your reward to risk ratio is. For example, my reward to risk ratio is, let's say, 10 to 5, for example. So let's say I'm speculating a decline. So for the price to decline, I've sold here. I know my reward to risk ratio is 10 to 5. So I'm looking, this is where $10 will be. This is where $5 will be. I'm not going to say staring at it, because if you stare at it, most likely it'll start to move like this and you'll close it somewhere here. in which case you're affecting the mathematics of your trading, which is an issue. The last thing is trading education is key. Build a bias and requirements. Everybody should take a screenshot of this screen. So every single asset will have a line of influence. Every single asset is influenced by something, and we need to find out what is influencing it. Okay, so let's look at the first thing. US stocks. The first thing which is influencing it is the global stock market. So if I want to speculate that the Nasdaq is going to increase in value, ideally I want all stocks, all stock markets to be increasing in value. That will give me greater confidence and an indication that indeed the Nasdaq is going to increase in value. The VIX, this is known as a sentiment tool, ladies and gentlemen. The VIX, if it increases in value, it indicates that stock markets will decline. If it decreases, it indicates stock markets will increase in value. So if I want to speculate a decline for the stock market, ideally I want the VIX to be higher. Some people will say, how do I get access to the VIX? It's on the MT5, it's on that app, it's also on Google as well. You can use the high-low index, it's a sentiment index as well. So you can use that for the stock market, especially for indices. The higher the better. Earnings, of course, the higher the better as well. Economic growth, components. Let's look at components, guys. So for example, Nasdaq components, we can see here. We can see everything's minus now. So here, for example, we can see everything's minus. So of course, that's an indication that the price is going to potentially decline. So all of these, so the top 50 most influential stocks are red. So that's an indication of a decline. Most likely, I'm not looking at the charts at the moment, most likely it is declining. So that's another indication you can use. So you can see here, I'm building a bias. So we've looked at a strategy using the moving average, but in addition to this, I want this to back up my strategy and back up my indications. Interest rates, higher interest rates is negative, low interest rates are positive. Bond yields, same thing. Lower bond yields is positive, higher bond yields is negative. So for example, if I go and look at bond yields, I haven't looked at this, by the way. Let's look at what bond yields look like. Bond yields are negative, it's only slightly negative though. It's only 22 points. So not massively negative really to give me an indication yet, but the US session has only opened, so we'll give it time. Currency pairs, what can massively help with currency pairs? Something that massively helps is don't analyze it as one asset. So the Euro USD is one asset. Don't analyze it as one asset. Analyze it as 3 assets. Asset number 1, the Euro USD. Asset number 2, the US dollar individually. Asset number 3, the Euro individually. So ideally, you don't want 2 currencies, both of them increasing in value or both decreasing in value, because that's conflict. Ideally, you want one to be increasing and the other to be decreasing across the market. That will give a more predictable price movement, easier analysis, and you're more easily able to determine how the price is going to move. Establish which is the driving currency, which currency is driving the price movement. Look at the currency index, such as the US dollar index. It will give you a fairer and stronger indication of how the price is likely to move. Bonds, not bond yields, but bonds, that can also be used as an indication. And then of course you've got all the news, economic releases, inflation, fiscal policy, and so on and so forth. Now gold, massively related in terms of correlations. We're not going to look at this in massive detail, but we will look at an example on the next slide. It's inversely correlated with the dollar, positively correlated with silver. We can look at the global currency performance, especially though the US dollar, and also the performance of the global stock market. If the global stock market is declining massively and it triggers a risk-off sentiment, then it can support gold as well. But generally, I'm looking to build a bias. So for example, here as NASDAQ was increasing in value, we saw all those buy opportunities. It's the same chart that we looked at before. So we had a buy here, we had a buy here, we have a buy here, we have a buy here. We've got all these buys. I needed something to back it up. This is the VIX. Remember what I said, the VIX down, that's positive for the stock market. Here we can see the VIX is down more than 5%. Here we can see bond yields are down 20 points. Here we can see the scenario at the moment is that interest rates will decline in September. All of this indicates upward price movement. So this is a good example of, yes, I've got these indications here, 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 and here, but I'm backing it up with fundamental factors. So ladies and gentlemen, that brings us to the end of today's webinar. Very quickly, we will have a poll. Here we go. I'm releasing a poll and we'll answer questions in a moment now. So which currency do you believe is going to be the best performing currency by the end of the week? Everybody, if people can please vote. And I'll actually tell you which is the best performing so far, if that helps. The best performing so far is the Japanese yen over the past 7 days. The worst performing so far is the New Zealand dollar. Which currency do people believe is going to be the best performing by the end of the week? The best performing at the moment is the Japanese yen, followed by the US dollar. The worst performing is the New Zealand dollar and the Australian dollar. I'll give people just 10 more seconds and then we'll end today's poll and I'll confirm what everybody answered. We need one more person to vote. Only one person's left that hasn't voted. There we go. So let's end the poll. Now, 0% said the British pound will be the best performing. 0% said the euro will be the best performing. 0 said the Swiss franc. 47%, so quite high, said the Japanese yen. And 53% still believe the US dollar will be the best performing. So at the moment, based on the poll, most people believe the US dollar will be the best performing as well as the Japanese yen, more the US dollar though. So if anybody has any questions, feel free to ask now. Can I use copy trading on HFM while studying the trading? Yes, you can. Also, you can use a mixture of copy trading with your own personal trading as well. That's also something that you can do as well. So for example, you can follow a trader to copy trading, but also manage the trades yourselves. If there's certain trades that you don't agree with, close it. If there's a trade that's in a profit, he hasn't closed it yet, but you want to close it, close it. If he's somebody that is a successful trader, but normally he leaves losing trades open too long for your liking, automatically close, manually close it yourself. So a mixture between copy trading, but also manual trading yourself. Any other questions, ladies and gentlemen? What is the minimum deposit for copy trading? It's $25 US. It depends on your region in your local currency though. So best thing to do, go to the live chat on our website, the support team, and they'll confirm for your currency and your region for you. Because of course every country has a different currency. What is the difference between a broker account and an exchange account? A broker account is for trading. An exchange account is for exchanging. So very big difference between the two. It also depends on what type of broker and what type of an exchange. Is it a stock exchange? Is it a currency exchange? But of course, it's a real exchange. Whereas a CFD broker, you're trading CFDs, not the real underlying asset. Somebody says, can you run through the slides again, please? I don't think people want me to speak for another 1 hour. What you will have, though, is a recording sent to you. So you're able to relook at the whole webinar again, because there was a lot of information there. So within the next 24 hours, we will send you the recording. So you, of course, will have access to that. Now I can see most people have left the webinar, only a few people are left in. I can't see any questions. Most people are saying thank you, amazing, goodbye, and so on. So let's end the session. If anybody's got questions though, they're more than welcome to email me, and I'm more than happy to give them as much information as they like. So let's end the session. Trade safe, trade responsibly, and if you have any other questions, feel free to get into contact with us. Hopefully you found today's webinar educational. In the meantime, have a good evening and goodbye.